Hey folks, and welcome to this video. This is the next video in our series where we are going to really dissect the concept of liquidity in a marketplace, because the price of any asset is not going to move unless there's liquidity available to buy and sell. So this is on the sell side, and on the buy side there will be an intention to buy this liquidity in the form of orders, some kind of an order. I just want to show some examples of some trades that I took yesterday, and then go through the logic behind them, just so that you can understand a little bit about why these trades were taken. Okay, so the price pattern was this. I saw this area that I thought was attractive, and the reason I thought it was attractive is because if you look at this in isolation, I mean, it's a wick, essentially. So what is a wick telling us? A wick is telling us that we had a price ladder where we had, and when I refer to price ladder, essentially I'm referring to this. This is a price ladder where you have different prices. So this is one. This could be like, for example, 7, 8, 9, 10, 11, 12. And this can be 6, 5, 4, 3, 2, 1. Okay, so this is the price ladder where you have each place where you put your foot on the ladder will be a different price. Okay, and price will move up and down that ladder dependent on the amount of liquidity available at each level. Okay, so if you look at this, I mean, we had this candle that was formed. Okay, where we slowly went up to the candle like that. We went up, then we went down very, very convincingly, and then following that we could not move beyond this price. You see, we had a test here, we had a test here. These are really nice prices. The reason I know they are nice prices is because price went up, left, price went up, and it left. Okay, and the fact that we had respect for price below here, so there was something in here, we can't see what. Price went up, we bounced here. Price went up to the same area, the sell zone. We went down, we sat on it, we distributed it, and we consumed. So this one's gone. Okay, and the origin of the move that moved through it is the sell zone. This sell zone, when prices managed to move up to the sell zone for the second time, we were able to move through this. So this tells me that this is an attractive price, or this and up are attractive prices. Okay, so if we look at that, what that looks like, let's go to a smaller time frame, the 15-minute chart. Okay, so this is what we can see. So the first order was put right at the edge of the box, as you can see, but we had the sell zone right there. That was the sell zone. And what else do we have? Well, here we talk about this loads and loads as well, where we have black space. So we have the departure candle, and we have black space. So price moves away, and since the departure there's nothing. Price has not been back there since then. Okay, so that tells us that this is fresh supply here. Okay, so what we have then is we have to have a look at this in a little bit more detail to try and understand it. Something else that we can see here as well is we have another sell zone. This is the first sell zone. This is kind of, I suppose, the macro sell zone, because this is the one we can see in this time frame, but a micro sell zone is here. You can see that we had just like we saw in the previous video, where price went up, we went down, we pulled down the slingshot, and here we were seeing closes below this low here. This tells us that from this price and higher we have attractive prices for sellers. So if we go back and find this area, we can see here, price goes up, we move down, we move sideways, we depart. But notice we have the same thing happening here. We can't really see it on this one, so let's go on a 1-minute chart. Let's let that data load. Got to locate it. Here it is. And so here you can see, like we saw in the previous example, we'll just do this here where we have this. Okay, we have this area just here. Price went up, we tested it, we went up, sideways, up, and then down. We tested it, we moved through it, but we did not trade below it. price had to come up to here. This is the sell zone before it was able to move. This is a mere continuation pattern. This little price pattern here, because it's happening on demand, is the facilitation of the price move lower. So this is where liquidity is being consumed, is being gnawed away by the market participants to sell. Okay, price goes down, and so here, this is where we are going to also experience some selling. So we're going to see some selling from the edge of the area. This is the this is the, I move this back up here. The edge here, this is the area of, this is the continuation pattern, okay, that went below. And then this is the beginning of the sell zone. So if we go back to where the orders were put, we'll notice that they're located between this area. I have to do that. Here it is. Okay, and so we did the same thing here, where we put one here, we put another one there, and you can see we went up here and we went down. Then price is, what is it doing? We have our plate of pancakes. We have obviously pause liquidity. Oops, that was too far away. Like that. So the first one comes, that one's gone, 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 and they keep going higher and higher and higher. And notice here that price goes up, then it goes down. When price goes up and it goes down like that, and it goes up, and then you can see the shape. Look at the shape, how the shape of this these patterns are changing. So price goes up quickly. We have a pretty gradual decline. Price goes quickly, slightly more, slightly stronger, quickly. We don't pass this top, and we go down. Okay, if I move that to here, and we go down really quick. Okay, we have a one bar moves down. So this is telling us that we are starting to fill those orders. Price goes up. We have another kind of feeble attempt. One last push to do what? Maybe there's liquidity above here in the form of stop losses that we need to flush out before we can drive price lower. Price comes down, we move sideways, up, and then price starts to break down. And then we leave. Okay, so this is kind of showing us what's happened. We're actually forming the shape where price goes like that. But you'll often see that where price goes, it shows up to a level, it shows strength and just a little bit of weakness. Okay, then it'll show a little less strength, a little more weakness, a little less strength, a lot more weakness. Okay, and then it'll continue like that, and then it'll flip. Okay, so you have the strength on the upside. Here in this move, you see it gets lower and lower. So here it goes, strong, slightly weaker, weak, and then the strength is now on the moves down. Okay, so here this is like a weak move down, slightly stronger, stronger, really strong. Okay, and you're seeing that pattern occur here at the top. And so what you can do, if you don't want to just put in your limit orders, you can just wait for this to happen. You can just look for these patterns to occur. And this isn't a really good example of that, but it does illustrate what is happening. You can see how we have, the same pattern occurring just up here. Okay, okay, and I got out of the trade here. This was early in the evening. I was not really at my computer, so I was just doing this on my telephone. But we have this one here. Here, this was a pretty interesting area. Why? Because we had these highs. We had these highs here. Okay. The slingshot was pulled back to here. This is where price continued north. So this was an important area. So I took one off here. Then I held the rest and moved the stops to break even. So there's nothing to worry about there. Then I just waited for price to see what it was going to do. And I knew that we had this area here, which is pretty interesting. Price went up to it. If price would have gone above that, then I would have eyeballed it here. If it would have gone above this, well, then I think it would have began to refill the price inefficiencies that we have above price. We have a little one here as well. But price did not. Price went up, we went down, we went up, and then we started to sit on it like we saw on the previous example, and then price cut through it. So this one is then gone. And then I knew that it was going to go a little bit lower. But then I also saw that we did have something going on here. and so I got off of all the positions just here. And and then this is where price turned and started to wriggle north. Okay, and I was not interested in looking at my computer anymore. It was time for my family, and so I just switched it all off. But you can see as well that when when you see volume increase, like you can see here, you can't really see it there. So let's go back to this time frame. When you can see you had volume increasing here, we had an increase in volume here, and it started to go down, then it started to increase again. So we had buyers, and then volume went down, buyers going slowing down, and then volume, as price was going down, the volume was picking up. Okay, so this is also a telltale that price is looking to slow down. And notice here how price wiggled south, then this started to flatten out, and then it started to pick up when we started to form some of these candles here. Okay, and then we had this big move here, so I could have waited for this move to happen and watched the volume. I suppose an average of the volume is maybe slightly increasing, and price pulled back, and then this is where you'd get out the trade, because price is pretty rarely going to go down to an area and then just go to the moon. It's very often going to rebalance these price inefficiencies that you can see here. So when this happens, you don't get out here in fear, you wait for price to revisit the origin, okay, which is essentially, I just got out of it here because it was lined up with this area, and so I didn't want to be in the trade anymore. But there's another example of this happening, of this playing out. Okay, we also had a couple more trades. Okay, here it is. So we had another one here on the pound franc. So we sold here and we got out just here. Our target was here, but I closed it out. So let's have a look why we would take this trade. And so we scroll back. You see I marked off a box there. I marked it off because if you go a little bit, you can't really see, but this is a pretty big move. You can't really see because the data is scrunched up. Maybe if I zoom in a little, you can see it a little bit stronger. Yeah, there it is. Okay, you can see that. I mean, like that, it doesn't look like a big move, but here it's a decent move. And so, using the rules that we have, we had this. This is demand. This is demand because it's removed stuff here. We had resistance, 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 an attempt, then price moved through it and traded above it for a period of time. We tested it once, and then here, we formed this, and then we cut through it. So this tells us that this is a price sensitive area, just here. Okay, and so I got in here. I notice that we had the beginning of the sell zone for this area is the high of this candle here. Okay, we want to see the wicks where, okay, the reason I use wicks is because if you have something like this, what this is the period opening, price going up, going down, and closing just below. So the open is above the close, price goes up, and we come all the way down, and we close lower than the open. That's what this is. So this is a wick. And what do we call wicks? We call them slingshots. And this is a slingshot. So price went up here, and then we left, and then we formed another full body candle that went down, price sideways, and then down. And so when you see something like this, you know that you want to be focusing above this price level and not below. Okay, because this is where the attractive pricing is. This is also roughly where we had this nice test, consume here pattern. So this is what I wanted to do. Looks like a funny little man. So that's what we have just there. Okay, so we got into that one. So we sold there. This is one trade, not several like the American dollar, Swiss franc. And we got out here. So people ask, well, why on earth did you get out there? Well, the reason we got out there is because we had these. Okay, price tested this area. Oops. We tested this area, test. Price rallied. We accumulated just below it, and just above that, we zoom in a little bit. You can see we have a little price thingy here, which I like, and I wanted to be out before here, and I just put it above this wick just by a little bit. Okay, and I close this out. Actually, this one hit the stop. I didn't have to close this one out, but I was quite lucky. Price went a little bit deeper, as it often does, into a wick to kind of explore price. Then it left. And again, this is roughly the same time as the American dollar Swiss franc, and I wasn't in front of my computer. And so we're out, done, fini, which is nice. Okay, good. Well, I'm going to leave it at that. I hope these examples helped help you understand the logic behind our process. Yeah, thanks for watching, and I will see you in the next video.